Oh, let's try this again. Hi, everybody. Let's try this all over again. Welcome to our live stream, Trending Thursday here on YouTube. That was my fault. I can't even blame Joey. That was all my fault. Thank you for being here. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Good Lord, we started off wrong. Joey's just smiling. He's got no responsibility for that. That's all me. Thank you for you to be here. If you can hear us loud and clear, please type in the room VV Nation, to let me know that we are coming across now loud and clear. Joey is my producer. Say hi, Joey.
Hi, Joey.
He's my guy that makes sure everything is good to go. So now everyone can hear, and we're good.
We do that together.
We do that to get. Somebody say that?
No, I didn't.
Oh, you said that. No, that's not how we do. That's messed up. All right. So what is Trending Thursday? It's all about what stocks are making the news. We look at the news articles about them. We look at the stocks. We analyze the stocks to help you make the right decision for you in regards to the stock. Is it a stock that you want to hold? Is there a stock that you want to buy now? Is there a stock that you're holding that you want to get out of? All of those questions will be answered in the stories that I cover every week. Now, the first thing we always do is we start off with market timing. Well, before I do that, if you're new to the channel, if you haven't already subscribed to the channel, hit the subscribe button. If your subscribe button is red, that means you haven't signed up yet. Just hit it. It takes, see this mouse? One click of the mouse, and you subscribe to the channel. That's it. Just do that. All right. As the commentary goes along and you like what you hear, don't forget to hit the like button. All right. And if you've got questions, by all means, please put your comments in there. And I'm with you, Thomas. We're going to get right into that. So we always start off with market timing. All right, market timing is always important because the stock market's direction affects about 80% of the stocks in the market. The market, as you know, if you are watching the market, is going down precipitously. Let's go take a look at our homepage. For those of you who are new, the software that we used here is VectorVest. Its company has been around over 30 years, analyzes stocks better than anyone out there, and we time the market. So keeping all of that in mind, what's the market doing right now? It's getting killed. It's getting slaughtered. It's almost down 700 points on the Dow. Everything is down in excess of 2%. Our VectorVest composite is down over 3%. The NASDAQ is down over 3%. So what's making this move? Well, our Fed chief, Jerome Powell, talked today at 12 o'clock. Now, let me set the table for you. Last week, he was in front of Congress, and Congress was asking questions about inflation. He said, oh, no. Inflation is in hand. We got it. And people were like, all right, if the Fed chair says that inflation's okay, then okay, it must be okay. The market continued on its way. Well, today, and it's one of my stories today, he said that as the country reopens, that could be a problem for inflation. What have I been saying on Trending Thursdays for the past few weeks? I've been saying things like, well, if the market is robust, inflation is a problem. Nobody wanted to talk about inflation being a problem, but I kept saying that inflation has got to be a problem. How do I know? Go to the store and buy food. Joey, you spend more money in the grocery store? Mm-hmm. I go to and I keep telling you about, I've got a 40-gallon Ford Excursion. Do you know this morning I went to put gas in my truck just for a half a tank, just for 20 gallons? I had to pay $50 for 20 gallons. That's just a half a tank. We'll talk about oil too. But inflation is a problem. Inflation is a problem, and he couldn't hide it for so long, and now he backstepped a little bit, and now the market is going, oh, wait a minute. Inflation is a problem. Well, understand, if you're trading in the market for any amount of years, you know that in a robust economy, inflation goes up because prices go up. How do you stave that off? You raise interest rates. Well, now that's going to be the second part of the story, right? Does the Fed have to raise interest rates faster than what they said? Think about that. How do you stop a economy that's running? You raise interest rates. Put the two things together, inflation rising, and then possibly adding in raising interest rates. What's going to happen in the market? It's going to go like, it's going to happen. There's no ifs, ands, or buts. But the market has been robust since what, 2016? With a couple of pullbacks. So keep all of that in mind. That's looking at almost 5 years worth of data. And so I'm putting that all out there in the context of what's going on in the market. If you use the VectorVest software, our third market timing signal just kicked over. We've got a confirmed down call. Let's see if it stays that way by the end of the day. Primary wave has been down. The DEW timing signal went down yesterday, and now the confirmed call. Those are our three major market timing signals. For those of you who are not subscribers to the software, we time the market. We've got 7 market timing signals depending on how you invest in the market, but those are our 3 main market timing signals. It now has all 3 of our major signals have gone down. What does that mean? Well, it means the market's down. Have we found the top? Possibly, and I'll show you where the top was. Now that you see where we are now, I can now officially call that the top. But if you're a VectorVest subscriber, we've been doing everything that we can to keep you from being blindsided before this hits. And that's the benefit of being a subscriber to the software. All right, I never try to hard sell the software in this room, but if you do want to take advantage of this, couple of things. If you do want to take advantage of a trial to the VectorVest software, 99 cents for 30 days. And further into this presentation, I'm going to show you how you can get access to the VectorVest software for free. For free. All right, Joey's going to put a link in there in regards to the 99-cent trial. Joey just looked at me. All right, you click on that link to get the 99-cent trial, but again, I will give you an opportunity to get it for free. So this is what's going on today. The market's getting smoked like a pound of bacon. All right, I love me some bacon. You like bacon, Joey? Mm-hmm. I love that bacon. Woo-wee. So with that, keep going on. What do we do right now? Let's go take a look. Actually, let's go into the stories. Let's go into my first story. And we're going to start with Fed Chairman Powell says economic reopening could cause inflation to pick up temporarily. Notice he had to throw that in there to stave off the market running around like crazy temporarily. It is what it is. Inflation rises. That's one of the bad guys when it comes down to looking at the market. Thank you, Joe. That's one of the bad apples when looking at markets conditions. There's 3 things that move the markets globally: earnings, interest, and inflation. If interest rates are still historically low, that's great. But if inflation starts to rise, at some point in time, he's got to pull the trigger to raise inflation to raise interest rates to stave off high inflation. All right, so that's all you really need to know. I don't need to read more into this. Well, he will. Said inflation is likely to rise as the economy recovers, but he thinks it will be temporary. People are going to see that inflation is going to rise, and they're going to react like they are doing today. And then there's the other side of this. Everybody, no matter what side you are on the fence about the $15 minimum risk, the minimum wage, a pandemic may be risky time for a higher minimum wage. It goes into, you talk about inflation, and I just want to put facts out there, and not just an opinion. But when you pay people more money, that adds more to your outlay of costs, right? And you base your product costs to the end user based on what you've got to put into the product. So even if I'm making a pen, okay, I have a set cost on what it takes for me to make this pen. But now, if you make me have to raise my minimum wage for the employees I have, what happens to the cost of the pen? It goes up, because I'm not going to suck up all of that. As if this is my pen and I'm making, I'm not going to suck that all up. I'm going to pass it off to the end user. So there's a lot of people that want to say, we've got to give people a workable wage. I'm all for that. But I think that entry-level jobs have a place in our economy. They're entry level for a reason. Now, people will say, yeah, I understand that, but even as an entry level, you got to give them a workable wage. I think that there's some meaning behind the word minimum wage. All right. Now, a lot of the people who are earning minimum wage, for the most part, not everybody, but a lot of the people who are earning minimum wage tend to be people fresh out of school, that kind of stuff, blah, 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 blah. But then there's a lot of older people that work jobs that have a minimum wage, and this is what the low minimum wage is affecting those people. How do they live? Okay. So, in my estimation, again, now this becomes my opinion. You learn from your minimum wage job, you learn skills that take you up to a different job that pays a higher wage. And you continue that, and it becomes a ladder effect. You climb the proverbial corporate ladder. Whether it's corporate or not, you climb a ladder to get to a place of where you can be. Now, there's a whole lot of arguments behind what group of people that affects, what group of people that doesn't affect, and so on and so forth. I just honestly think that you strive hard to do the best that you can, and you go to school the best that you can. You learn a skill the best that you can so that you can better yourself. That's my opinion. All right. So that's my take, but the truth of the matter is that the facts are you raise minimum wage, it does raise prices. There's no ifs, ands, or buts about it, and I don't believe you can get around that. So I tie those two things together. You guys make your own decisions, and I know that you guys are sitting on one side of the fence, and I respect both sides of the fence. I honestly do. I'll tell you personally, I come from the inner city of Brooklyn, and I did everything that I could do to do the right things to be where I am right now. Am I lucky? Possibly. Was I driven? Possibly. Did I have positive influences in my life? Possibly. There's a combination of a lot of different things to make that happen. All right. I'm getting off of that high horse. I'm getting off of that semi-political platform right there, but I think the whole idea needs to be talked about in regards to the possibility. I don't think it's just going to be a possibility, but of raising the minimum wage. All right, so I put that all out there. Those are the things that could be affecting the market. Let's get back into the software. Let's go back to, I'm going to go to my watch list of stocks that I look at. I've got 2 stocks that I always look at every week for the purposes of timing the market or looking at what's going on in the market. Let's go find my YouTube Trending Thursday. Let's go find my most recent one, Trending Thursday 03 today. The 5th? 4th? 4th. Today's the 4th. Let me go find it. Here's my watch list of stocks that we'll cover today. And always, every week, we've got 2 stocks in here, which always we look out for the market. One of them is the VVC, towards the bottom of the list, and my other one is the S&P 500. For those of you who are subscribers to the software, we use the VectorVest composite as our way of timing the market. Looks at the index arithmetic average of over 8,500 stocks, whereas we look at the S&P 500, which most people use for timing the market, but it tracks the movement of 500 of the most prominent stocks that are out there. All right, I am not going to analyze them. I do want to look at their graphs to see what's going on. Let's go view the stock graph. Let's maximize this. And here's the movement of the VectorVest composite. I'm going to go change my layout and put it on for Trending Thursday. There we go. Trending Thursday. What am I looking at on a graph? I'm looking at a 20-day exponential moving average on the VectorVest composite. How about now I can call this the high? The high looks like it occurred on 2/16 of 2021. And from a market timing perspective, for those of you who are not subscribers, here's our fastest signal. It gave a signal. How about that? 2 days off the high. For anybody who honestly thinks that we cannot time the market, folks, we've been doing this for 30 years. If you're more of an aggressive trader, how cool is that? 2 days off of the high, it gave a down call, and look at what's happened since then. I've got a couple of other market timing calls that I will not put on. I don't want to give you all the secret sauce behind the software if you don't have a subscription. But the fastest, most aggressive signal that we have gave us a down call 2 days off the high. And if you're more conservative or more prudent, those calls came later. But big move to the downside. I've got a solid level of support sitting right now on the VectorVest composite, sitting at $59.40 43 cents. Let's go see what happens. The market does have some downside to that level, and look at the bump up in volume. Not only is the market falling, but people are getting rid of stocks. People are getting rid of stocks. Now, I want to say this one other thing. For any of you who want to learn, not just from me, if you want to know more about how good this software is, listen to some of the people who are chatting in the room. Many of the people that are here are VectorVest subscribers. If you don't want to take it from me, especially if you're new, if you don't want to take it from me, listen to what they say. Listen to what they say. And I think that it will resonate more with you than just looking at or listening to me. What's the do today, Yogs? It went down yesterday. All right, and let's go look at the S&P 500. Wow, same scenario. I had a level of support on the S&P 500 sitting at 378.35. Today it broke through. Look how many times it touched that level. Even more recently, it broke through today. I've got another level of support for downside. If you want to see how much more downside is possible, here's another level of support on the S&P 500 sitting at 364.60. All right, there you go. So I'm putting that down out there. S&P does have some more downside. The VectorVest Composite does have some more downside as well. RT on both have also fallen below the value of 1. All right, before we move on to our next story, does anybody have any questions about what's going on in the market right now? Today's market is going down precipitously, but there is news behind it, and just giving you some basic understanding around the news that came out today with Powell is what's moving the market. Thomas says today, I spoke to a restaurant owner this morning, and he's going to drop all the wait staff and only have someone to drop off your order at the table after you place the order at the counter because of $15. Man, that's, and again, it doesn't matter what side of the fence you sit on, facts are facts. If you raise the price on anything, on any product, you have an influx of a raise of price, it's going to affect the product. It is just going to praise the product. Now, Mark, I'm not afraid to read this. Mark says, been a member for 6 months. I'm losing money every month. I can't see that. I can't see that. If you have a plan, Mark, and you trade your plan, I can't. This market has been too robust over the last 6 months for you to say that. I honestly think, I don't know what you're doing or what you're not doing, but if you have a plan and you trade your plan, I can't see you losing that kind of money over the last 6 months. The market has just been too robust over that time period. All right. On the other hand, Aaron says, been using for 2 months, already made back the subscription. Very helpful. Just need to keep on top of your stock. So there you go. All right. So I'm not afraid to read the negative stuff out there. Not at all. I don't know. Jay says, how long will this last? Until it stops. That's the God's honest answer. It's gonna last until it stops. All right, and I'm with you, Ted. But and I'm not gonna beat up on Mark for what he said. He gave an honest assessment according to what he's going through, and stand that and accept that. But there's huge that you need to have a trading plan. All right, is it possible for you to look at the Canadian market and comment on why? I'd have to open up the VectorVest 7 in the Canadian market. I do not have it open, and I might have to think about doing that sometime in the future every so often. Can you cancel at any time? Absolutely. Absolutely. All right. So I'm going to move on to the next story. I thank you for the comments and thank you for the questions. Thank you for the questions. And Mark, you need to give our product support staff a call. You really do. Give our product support staff a call to help you out on what you're doing. All right. Number 2, next story, oil. Oil is starting to move. I want to tell you something. Oil is the 4th fastest moving industry over the last 2 weeks. So what have I always said, and you'll type it in the room, what have I always said about what moves oil? Type it in the room. We got a little bit of a delay, not big. We got a little bit. Yeah. All right, so I'm going to give them a chance to type it in the room. What moves oil? What moves oil? Demand. There you go, Mark. There you go. And oil demand is starting to pick up. Why? A couple of different reasons. There was a big pipe project that President Trump had in place that when President Biden came into office, he shut down. A lot of the drilling we were doing, we were pulling a lot of oil out the ground, enough that we had a lot of ships sitting offshore as our housing for oil. We've gone through that. We're now in our own stores of oil. Without that extra oversupply, demand is going to pick up. Oil jumps more than 2% on U.S. inventory draw. Now we're going into our own inventory instead of having all of the excess oil. Somebody says oil is going up because of Ford Excursion. Listen, I won't trade my Ford Excursion for nothing in the world. I want you to know that. John, no. And John, you should see, if you're looking at my my YouTube videos, the individual videos, I use that now, thanks to Joey, in my videos. You know why? Because we're going to have ourselves a good show today. Yeah. So I put that out there. John knows what I'm talking about. All right. So I'm sure there's a lot of people out there that know what I'm talking about as well. Killing the Keystone pipe has nothing to do with the higher oil prices. Look at OPEC. So, Doug, it's got a little bit to do with the oil prices. And that's what my next part of the story, Doug, just to let you know. Oil prices jump as OPEC keeps production largely steady. Saudi Arabia continues voluntary cuts. So, Doug, I got you. I know that's Doug, I got you. That's a bigger part of what's going on with oil, but I still think that the pipeline has some to do with it as well. I'm going to take both in there. Pipeline costs $10 a barrel to ship, rail and truck $35. That's a lot. I feel the same way about his F-150 as you do about my Excursion. I wouldn't change that for nothing in the world. All right, so I'm putting that out. Nonetheless, when you look at the cuts in oil, when you look at that we're drawing into our stores of oil demand is going to pop up. So it doesn't surprise me that in looking at the VectorVest software, I'm going to go back to the software. In the Unisearch tool, we have a search called Deltas, searches industry, and I ran a 10-day price delta on industries. Petroleum drilling was number 4, was the 4th fastest industry. Now, I'm not going to run it again because not all of you in the room are subscribers. But for my subscribers, I'm showing you how to find what the fastest industries are at any given time. So I'm just putting that out there. And by way of the search, I found out that petroleum drilling was the 4th fastest moving industry. So I'm going to go back to my list. Actually, I'm going to go stay with my list. Let's go find out what stocks I was using to track oil. Gush was as a 2-time ETF on oil. Gush for the upside and Drip for the downside. If you want to play oil as an industry, I have the U.S. Oil Fund ETF, USO, and I've got one more. Oh, yeah, I looked at ExxonMobil. That's a big player in that space, isn't it? All right, so here's the 3 stocks that I'm looking at in regards to oil. Let's right-click. Let's view the stock graph. Let's pull them up real quick. That's the ETF, a 2-time ETF, bullish ETF on oil. Look at that. How about when it went up above the 20-day exponential moving average? RT was above 1, moving. Am I late to the party? No, I don't think so. A little bit of pullback today on today's candle with a big wick at the top, but still clearly above the 20-day exponential moving average. How about volume is rising? Volume is conviction on anything, whether it's on an ETF or a stock. RT is above 1. Because it's an ETF, it doesn't have, I'm going to take off earnings, growth rate and earnings per share. But that's what oil looks like now. Demand is picking up. Let's go back to a year during COVID. Oil got decimated. It stayed decimated. Then the April contracts or May contracts came out, and it was so low that it pumped. And then look at that. Looky, and now it's starting to run again. All right, let's go put this back on a 3-month graph. That's on Gush, the ETF. How about another ETF, USO, U.S. Oil Fund ETF, doing the same thing, moving up. Volume's pretty steady. Spike up today, big pop, nice gap up from yesterday's close. All right, and look at that. Last but not least, ExxonMobil. in that petroleum space, running up as well. Look at the volume most recently on that, RT above 1. I'm thinking that oil might not be a bad play. And sometimes just because the market moves in one direction or another doesn't mean that oil has to follow. Oil is its own commodity, and it's based on that demand, moving oil. The market could be up, oil could be up. The market could be down, oil could be up. That's what's happening today, right? The market is down, but oil is up. And as the market has been pulling back since that 216, remember we've said that was the top? Let's go find 216, 212. There's 216. That was the top of the market. And what's oil been doing since then? Going up. Going up. So there we go. All right. So that's my story on the oil industry. I'm thinking that with the demand, oil may not be a bad play right now. Just make sure no matter which one of these or any of the oil stocks you're looking at. And actually, I can do this. I've got a watch list. I've got a watch list of HIJK. Do I not have oil? I thought I had crypto, gambling, gold, petroleum. Here's petroleum stocks. I got a whole list of petroleum stocks out of the software, made my own watch list. It's got 72 stocks. And from here, I can use the analysis from VectorVest to pull up which ones are moving the fastest, which ones have the best earnings growth rate, which ones have the highest potential for value, which ones are the safest. As a VectorVest subscriber, you can bring that up. Notice that stocks like MRO in here. All right, that's a stock that's making news that's out there. RIG, Transocean is in here amongst these stocks by way of VST. All right. Anybody have any questions in regards to oil? So should I go invest in oil today while the prices are low? Jay Cost, I'm with you. All I'm saying is you make sure you buy higher than the most recent high to make sure you're buying into a stock as it's rising. Hey, what do I have to do to get you to show on military contractor stocks? Seriously, though, what are you talking about? To do a show? I don't know what that is. All right, with the Enbridge Line 3 completing this year and the Trans Mountain Pipeline coming online in 2023, Canada has good transport oil capability. Understand, Doug, that Canada is a resource-rich economy. Whether it's gold, silver, copper, oil, the majority of the stocks in Canada are resource stocks. So when resource stocks get hit, Canada's exchange gets hit hard. A lot harder than ours. All right. Your stocks in Canada are very resource rich. Can you make your own watch list for options or penny stocks? Yes, you can, James. And if you need help with that, every stock that has a little X in front of it shows that it's optionable. And for penny stocks, you can do that as well. You might want to think about giving our product support staff a call. All right. Where do you find the oil companies in VectorVest? You can always go into we're in the viewer. Scroll down to the industry viewer right here. Industry, we have 221 industries in the software. And look at that, petroleum, Canadian. I can sort all of the industries alphabetically. All right, and then scroll down and find all the stuff that's in petroleum. How many industries in that sector? 1, 2, 3, 4, 5, 6, 7, 8, 9. There's 10 petroleum industries, and I can go through and make my own watch list of stocks out of each one of these industries. So yes, you can, Nailish. All right. All right. With that, folks, have a good day, Jay. With that, we're going to move on to my next story. Thank you again for the questions, good comments. I appreciate that. Are you sure it's Tom or one of its? Stop, Jay. What are you doing? Why are you messing with Jay? Leave Jay alone. I'm going to put you in timeout. Yeah. Okay, let's go to my next story. Always hot on the list, coronavirus stocks. Now, real-world data shows Pfizer's COVID vaccine is giving very strong results after one dose. Interesting. We all know that Pfizer is one of the 2-dose companies, right? But it's saying very strong results after one dose. Policymakers in Britain felt vindicated after deciding to delay second doses to around 3 months, aiming to inoculate more people at a faster rate with the first dose. So remember when we talk about in the market, planning your trades and trading your plan? Well, the COVID vaccines came to the market with a plan. It looks like Britain is trying to change the plan. Now, my wife actually gets her second shot today. She's a respiratory therapist, so she's a frontline worker. Those shots require the second shot in a certain amount of time. And if Britain says they're going to change it to around 3 months, how effective is the second shot going to be? Are they shooting themselves in the foot by trying to change the plan? Since the study started in January, protection against symptomatic COVID 4 weeks after the first dose ranged between 57 and 61% for Pfizer and between 60 and 73% in AstraZeneca. AstraZeneca is not approved yet in the U.S., but it is in Europe. That will be the fourth shot once it goes through the process of going through the FDA. All right? So it's interesting in that they're trying to change the plan a little bit, but to get the doses out faster. I still think that there's a purpose behind the first dose, just like there's a purpose behind the second dose. And I think that if you change the plan, I think for some reason or another, it's not going to be a good thing. All right? I'm just putting that out there. I'm just putting that out there just to let you know. All right, let's go. I've got another one. Johnson & Johnson did get its okay, so that makes number 3. So we've got Pfizer, we've got Moderna, we've got J&J, and I think AstraZeneca is probably going to be 4th. Vaccine is okay. You see that? Okay. For people to have who have allergic reaction, excuse me, to Pfizer or Moderna. So J&J, what do I like about the J&J vaccine? It's a one-shot vaccine, and it requires the least amount of refrigeration. So keeping that in mind, I'm thinking that the VA for me has already put out invitations for people to go schedule their shots, which I've been so busy I haven't done it yet, but I'm going to. I'm thinking that I think we're all going to have a choice of which shot we want or which shots are available to get, from your provider. But Johnson & Johnson seems to be a win-win across the board. One shot, less refrigeration. There we go. So I'm just keeping that in mind. And one last one. This is AstraZeneca. The shot recommended for elderly in Germany. Remember, AstraZeneca is okay in Europe, not okay in the U.S. yet. So it's just going to be a matter of time before it will present to the FDA to get emergency use, and then be our 4th shot. All right. Glenn, would you buy a high-quality oil company today in light of the confirmed down call? So remember, everybody I said in regards to oil doesn't always correlate to the direction of the market. I said that for a reason, because I don't want you to be afraid to buy oil now. Just make sure you're buying it as it's hitting a new high, higher than the high, to make sure that you're buying into a rising stock. My job was to show you that it's on the move. Your job is to say, wow, it is on the move, and it doesn't have a direct correlation to the market, so I would not be afraid to buy an oil stock. Now, no matter what, we all know that the market is pulling back. No matter what stock you ever get into, always trade your stops. I don't want to be remiss in telling you that. Always trade your stops. If whatever stops you have in place hit, you get out of the stock. It all comes back to plan your trade and trade your plan. Everybody in this room should know that, right? Glenn, 2 shots is twice the revenue than 1. I hear you, Barry. Last week, I talked about which company was making a lot of money on these shots, right? And Barry, you're right. 2 shots does give you more revenue. Absolutely. All right. So those are my stories on the vaccines. I'm going to go back to my watch list viewer. Let's go find 3/4/21. Here's my stocks. Now, for those of you who are new, when we look at a watch list of stocks, this watch list is automatically sorted by our master indicator VST. So the stocks that have the best combination of value, safety, and timing automatically rise to the top of the list. And this is unlike any other watch lists that you will experience now. You can build a watch list on Yahoo. I can build a watch list in Schwab. Everyone can build a watch list in E-Trade, Ameritrade, Thinkorswim, all of those places. But they are simply just watch lists. In the VectorVest software, these stocks are just not put in as you type them. They are sorted automatically for you, so the stocks that have the best combination of value, safety, and timing come to the top of the list. All right, I'm going to set this up so that it auto-fits all of the columns. Let's go see what my stocks that I have for coronavirus. Moderna has the best out of the coronavirus stocks, have the best valuation for value, safety, and timing. What else is in here? Johnson & Johnson, AstraZeneca. I'm missing one. Am I not missing one? Pfizer. Pfizer was the first one to come to market, and for some reason, it is just the one that's having the hardest trouble getting out. Now, I'm going to answer this in this way. Notice that when I look at the earnings growth rate, which is GRT on all of these other stocks, Moderna grows their earnings at a clip of 50% a year. Johnson & Johnson grows it at a clip of 2% a year. AstraZeneca grows it at a clip of 19% a year, whereas Pfizer, though, grows it at a negative earnings percentage. That's got a lot to do with this stock in regards to good, bad, or indifferent. Now I'm going to analyze these the only way the VectorVest can. We're going to go over the stock. Moderna is trading at 130. It's got a value of 341. Value is what we feel the stock is currently worth. We look at things like earnings per share. We look at, which is forward guiding for us. Earnings for us is a 12-month leading earnings. Plus, we look at earnings growth rate to say what we feel the stock is worth. Our mantra is to have you in safe, undervalued stocks that are rising in price in a rising market. Johnson & Johnson at 152, value of 188, also undervalued. AstraZeneca trading at 46 with a value of 56, also undervalued. Pfizer trading at 33 with a value of 34. We're going to call this fairly valued. So all three of these are undervalued. This is fairly valued. Let's look at our indicators. Relative value looks at a stock's long-term upside potential, 1 to 3 years as compared to a AAA corporate bond. Relative value at 1.89 on that scale between 0 and 2 for Moderna is at 1.89. Moderna should outperform a AAA corporate bond by 89% over the next 1 to 3 years. Johnson & Johnson above 1. This company should outperform that AAA corporate bond by 19% over the next 1 to 3 years. And AstraZeneca should outperform that AAA corporate bond by 40% over the next 1 to 3 years. Pfizer is going to underperform that AAA corporate bond. So if I had a choice of looking at these stocks, would I rather own any one of these that are going to outperform, that should outperform that AAA corporate bond over the next 1 to 3 years, or one that will underperform? We'll look at safety. Relative safety is an indicator of risk. Relative safety looks at the consistency and predictability of the financial performance. You still have oil on the screen. I do have oil on the screen, but I highlighted the 4 stocks that I'm looking at. All right, just want to make sure everybody's seeing what they're supposed to see. Relative safety. Is this a safe stock? Moderna is above the value of 1. So it's less risky. Johnson & Johnson, above the value of 1, is less risky. AstraZeneca, on the other hand, has got a relative safety below 1. It's a little bit more risky, whereas Pfizer's got a relative safety above 1. It's not as risky. So it's fairly valued, doesn't have good upside potential, but may not be that risky of a play. Let's look at relative timing. This tells me if the stock's in an uptrend or not. All of these are cast on that scale between 0 and 2. Moderna is at 0.69. Tells me that Moderna is in a downtrend. Johnson & Johnson at 0.87, in a downtrend. AstraZeneca at 0.78, in a downtrend. And Pfizer at 0.75, in a downtrend. Let's go look at these stocks. So we analyze the stocks. Let's view the stock graph. So we all know that all of them are in a downtrend. So is this news good or bad for the stock? So Moderna, I've felt that this was the best stock in the space based on the fundamentals for the coronavirus. I have a level of support sitting here at about 102.86. The stock's price is below the 20-day exponential moving average. Would that have been a good time to get out of the stock and take profits? Absolutely. So the news is out there. It's out there, and they're thinking about, I did a story here on Trending Thursday about they're thinking about putting out a booster shot to go against the variants. That makes 3 shots for them. So the person that said that it yields more money, 3 shots would even yield more money. All right, currently below, if I'm thinking about getting into it, I'd wait until it goes back above the 20-day exponential moving average. Johnson & Johnson, I had a trend line here. I'm going to take that off. All three of these, how about that? Johnson & Johnson's below. I'd wait for a better buying opportunity. Now, if you own the stock and you think that the stock is going to go up long term, I would think about playing options on it if you want to hold it long term. Think about either selling a covered call or buying a put for protection. But the volume is picking up to the bear side. People are selling out of it. AstraZeneca, again, it's not approved in the U.S. yet. It probably will be the fourth shot, but definitely going down. I think there's more behind it than not, that I haven't done a deep dive on it. And Pfizer below the 20-day. So all of these shots are out there. You ask yourself then, should I be buying any of these? In my opinion, I'd wait for any of them to go back above the 20-day exponential moving average. But there's good news behind them. People are getting inoculated. All right, people are getting inoculated. All right, we'll close that out. Anybody got any questions on this? Glenn, can you please cover when to use the confirm call versus the primary wave in DEW? I'll do that real quick. Primary wave is more for the aggressive person. The DEW is more for the prudent person, trying to hold stocks for a couple of days to a couple of weeks. And the confirm call is for the longer term retirement person. Glenn, can we back test if they outperform the AAA corporate bond? Sure you can, but you got to know what the value, you got to calculate what the value of the AAA corporate bond is. If you do that and you come up with that number over X amount of period, then you can check those stocks to see if they outperform those AAA corporate bonds. Absolutely. Software is not helpful. You need to give me more than that, then the software is not helpful. If you ask the majority of the people in this room, I don't think they would agree with that. All right, I'm not going to even answer that. I'll let the people in the room answer that. And that's the way I'll go with that. All right. Like I said, I don't mind reading the bad stuff, but talk to the people in the room. Talk to the people in the room. All right. Because I can't co-sign that. I've been here for 17 years. I can't co-sign that. All right. Any other questions in regards to the coronavirus stocks? All right. We'll get there, knees. We'll get there. Maybe PFE's vaccine deflates the effectiveness of its other meds. I don't know. Now, a company like Pfizer's got a lot of stuff in the pipeline besides coronavirus. All right, it's got a lot more in the pipeline than just coronavirus. So, Mark, that could affect Pfizer more so than not. I've got to think about that a little bit. So, and again, I wanted to put that out there about, the software not helpful. Marin, listen to the people. Listen to the people in the software. And right there in the chat, they'll talk to you. All right, I'm going to move on to my next story. Next story is social media stocks. How many of you got affected by this? Zoom recovers from hours-long outage, says issues were likely due to local internet glitch. How many of you use Zoom? I know that in meetings that I have with church, for the people who don't want to go to church, we use Zoom. Schools are using Zoom. I'm sure that outage on Zoom affected a lot of people. It affected a lot of people. So they put out, and that's a social media stock. People, do your kids go to school on Zoom or something else?
Yeah, they use Zoom.
They do use Zoom. So Joey's kid, but all your kids did go to school, all of them.
Today's the first day.
So Joey's saying all of his kids went to school today in person. So family meetings due to pandemic, absolutely, Sandy. Don't use social media stocks, says Tom, and that's fine. Not everybody does, but I'm just telling you that was a story that happened this week. We're gonna take a look at the stock. Amazon in talks with NFL for Prime Video rights deal. Look at that. I did a story on AMC talking about the movies. Streaming is going to be the way of the future. I think it is. Why? Because it's easy. You do it at home. You don't have to go out to the movies. You don't have to go out for this, that, and that. And that's a huge story right there with getting rights. Do you know that every so often Facebook, they did that a few games last year, right? They did them on Facebook. So Streaming is going to be the way to go. That's big news, though. Could that help the stock? We'll take a look at the graph. This is big. Google won't use other web tracking tools after phasing out cookies. How many of you recently, when you go to any website, the website says that we use cookies and you have to accept before you go to the website? I've seen a lot of that going on right now. Any of you seeing that as well? Any of you seen that as well? Hi, sir, I have 400 shares at 618 now price. Can I cover, call, or put? I don't have any idea about options. No. If you don't know about options, you ain't learning from me today. I'm not doing that. Before you start to play any options, you need to learn about options. I'm not putting myself or this company in that spotlight just on the spot. I can't do that. So I'm noticing that people have been saying that, yeah, you have to go through and accept that they do cookies. But Google is not going to use, cookies is a way of tracking you, all right? Google won't be using any other web tracking tools after phasing out cookies. I don't know how much I believe that story or not. Google is the biggest search engine out there. Excuse me. And I still think that they're going to have things in-house to still track you. So, but that's something that's out there, especially talk about phasing out cookies. When I'm looking at every website that I go to, I've got to check that that I'm using cookies. And last but not least, who's coming after Zoom? How about Facebook's WhatsApp adds voice and video calling feature to the desktop version? Everybody's trying to go after that. Why? Because Zoom made a killing during the COVID-19 height, didn't it? Because everybody and their mama was doing video calling, video conferencing. And now people are still trying to get on that train. Oh man, my board's not on. Everybody's still trying to get on that train. So WhatsApp is doing that as well. All right, that could have helped the app, but that's actually Facebook. Facebook is WhatsApp. All right, so keeping that in mind. Let's go take a look at those stocks. So what was I looking at? Google. How about Google is the top stock by VST in my list. What else? Facebook is number 3 in the list by VST. Somebody just said social media stocks are moving. Sure they are. Amazon is number 6 in the list. Zoom is right in the middle of the list, and I think that's the 4 that I need to look at. Look at where they stand in my list of 17 stocks. That's giving you an idea that social media stocks are moving. I analyze them. Alphabet is undervalued. Facebook is undervalued. Amazon is overvalued and always has been. Zoom is overvalued. Zoom jumped up so much because of COVID-19, it blew through its value point. All right, relative value, upside potential on Google is there. On Facebook is there. On Amazon is there. On Zoom. All of these stocks could be a good value play. Most of them are undervalued and, 2 out of the 4, 50% of them are undervalued, 50% are overvalued. But these stocks altogether have the potential to outperform a AAA corporate bond over the next 1 to 3 years. These stocks are all safe. Relative safety is above 1. These are not risky stocks. Relative timing tells me that Alphabet is in an uptrend, and that's the only one out of the social media stocks that I'm looking at right now that are in an uptrend. But look at earnings growth on Zoom, 55% positive earnings. Amazon, 30% positive earnings. Facebook, 19% positive earnings. Google, 16% positive earnings. These are not bad plays. They are in that social media space, but they're not bad plays. Let's go look at them now technically on a graph. Here's Google. Coming off a high, but moving sideways. Not moving down, but moving sideways. Currently back and forth above or below that 20-day exponential moving average. Volume has been pretty steady. Next one. Facebook doesn't look nearly as good as Google does, but also starting to move sideways. Currently below the 20-day exponential moving average, but right at a level of support sitting at 254.45. What would I be looking for? I need this stock to get out of its own way, out of that channel. I need this stock to at least get above 276 before I think about buying it. That's a good level that this stock has had a hard time breaking above and staying above. All right. That's on Facebook. Amazon is getting beat up a little bit, fell below a level of support sitting at $3,079, currently at $3,007. Created a new level of support on today's candle on big volume. A little bit of an indecision day. And last but not least is Zoom. Man, because of that outage, they could have gotten smoked badly. All right, but 2 down days. I don't know if it's just the outage or if it's more news pulling it down, but it went through 2 levels of support. The first level was at 375. A new level was at 355, and the last level I have is at 331. And look at that. Look at where today's wick stopped, right at that near that 331 level. Zoom is a tough stock to be in right now. I would wait, if I'm not in it, wait for the stock to go back above that 20-day exponential moving average. Excuse me for 1 second. All right, I had to sneeze, but it didn't happen. All right. So that's where I stand on these stocks. They are moving. I would wait by way of the graphs for more confirmation of the move. The news is there about what's going on with the stocks, but from a graph, I would wait. I love the analysis on it. These stocks, for the most part, are good. But you know something? Sometimes there's a bad time to even be in a good stock from an analysis perspective. All right. Any questions on my social media stocks today? Any questions? Any questions? Any questions? Today is your birthday. Let's see. Okay. No questions? Glenn, why some stocks have high CI but very low RV? They should have similar rating, in my opinion. It doesn't make sense. Oh, no. There's a difference between the two. RV looks at a stock's upside potential over the next 1 to 3 years. Right? CI looks at the stock's ability to withstand longer lengthy price declines. 2 different things. High CI stocks mean they tend to go up more than they go down. High RV stocks say that they are a good value play that over the next 1 to 3 years, they should outperform a AAA corporate bond. So keep those. They are 2 different things. Can you explain the color guard with a star mark? Raj, no. If you're a subscriber, we do that in the daily color guard report every night. You got to watch the report. We go into deep detail about it. All right, before I get into my next story, I want to reiterate, don't forget to comment, like, and subscribe. Whew. All right, I see a lot of comments. It's out there. How many likes do we have? 95? Can we get to 200 likes? Can we do that? Wow, you guys don't like what you're hearing? Am I pissing them off today? Maybe. Listen. Not yet. It's not yet. It's not until Saturday, p.m. It's not until Saturday. All right. And wow, nobody likes what we think. Well, listen. Let me tell you something. I'm not here to tell you what you want to hear. I'm here to tell you what you need to hear. That's it. So whether we get the likes or not, I like the likes, and I cannot lie. No? Okay. All right. If there's no more stories on my social media stocks, Ken's got question marks. What did Ken ask? Did I miss Ken's question? What about XROF? Is that what he's looking at? All right. We put out 3 videos in the last couple of weeks on XROF here on YouTube. Go take a look at them. That's why I'm telling you, if you're not a subscriber to the channel, please hit the subscribe button. Hit the bell icon so you'll be alerted to all the new content that comes out, especially when we do another XROF video. All right. Did you do that on purpose? What'd you move it up for? Okay. I think you should promote VV products until people get the likes up. No, I'm not going to do that, John. I'm not going to do that. We don't track buzz yet, and as soon as we do, I'm going to analyze it for you. All right. as soon as we have it in the software, I will analyze it. It's going to be a very interesting stock. Joey and I were looking at it elsewhere, not in the VectorVest software, but it's going to track social media stuff. It's going to be very interesting to play that. It really is. So we'll keep that in mind. All right. My last story. Let's go to my last story. My last story looks at airlines. Airlines are starting to move. Why? Because people are getting inoculated. People are feeling a little bit more safe. And I think people are itching to fly. People are itching to go on vacation. I think that as people get their inoculations, they're going to feel more comfortable to get out around other people. So budget airlines plot pandemic breakthrough. New planes, new training and hiring. Airlines are planning for a rebound after the dismal pandemic year. So airlines are investing in themselves to get ready to go rock and roll. All right, let's go take a look at the stocks that I have for them. I'm only looking at, let me see. There's American Airlines, there's Love, there's Delta. Those are the only three. Nope, I got one more. What's the last one? There it is, United. Notice where they sit in the list. All right, so, interesting about travel stocks, when I did that same search on Delta Searches Industries, airlines is the sixth fastest moving in the last 2 weeks. You could be getting in early. All right, let's go. I'm not going to even analyze these. Let's just go straight to the graphs. All right, let's go straight to the graphs. They are moving. American Airlines definitely above the 20-day exponential moving average, down day to day. This is why I say always want to make sure that you're buying higher than the most recent high to make sure that you're buying into a rising stock. RT is above one, pulled back today with today's action. Love above the 20-day, a bigger move away from the 20-day. Look at the wick today. Look at where the wick stop on the low, right at the 20-day exponential moving average. Let's go to the next one. Delta, all of the airlines seem to be falling today, but still all of them for the most part are above the 20-day exponential moving average, all of them. Airlines are on the rise. If you're looking to get into them, I would go about 12 cents higher than the most recent high to make sure I'm buying into them as they're rising. Any questions on my airline stocks? Any questions on my, we were mesmerized by what you were saying and forgot to hit the like button. Is that what it was, King Monocore? How many likes we got now, Joey? Yep, we ain't up to 200. You guys ain't gonna tell me you still mesmerized. I know we can get to 200. All right, and some of the stocks that you're typing in the room, I will try to look at, but Joey's going to give me a listing of stocks to look at. And that's right. JG is right. One thing that I didn't put in here, and I do want to take a look at is jets. That's a good way to play the whole industry. Thank you for that, JG. That's a great way to play the whole industry if you don't want to look at any one individual stock. This plays all of the global jets. And look at where it stopped today. Again, JG, thank you for that. Kudos. Look at where its wick stopped today. Its low for the day stopped right at the 20-day. Right at the 20-day. All right, so if there's no questions, look at that. You see what time it is, Joey? I don't want to hear your mouth later. You see what time it is, right? Oh. That's right. See what time it is. We'll see at 3:30. Well, you will still see it's 3:30, but Joey keeps trying to make me stop at about 3 o'clock today. I got to stop right about at 3 o'clock today. So, Score Media, new to NASDAQ, thoughts, DraftKings interested, buyout is reported. I've been hearing that. I'm not sure yet. I haven't seen anything that says that they're getting bought out just quite yet. There's a few stocks in there. There's DraftKings, there's the other one, and then there's Penn Gaming. What's the other one besides DraftKings? There's another one. I don't remember what it was. All right. So, you know what time it is now, right, y'all? You know what time it is? All right, let's go take a look at your stocks. Joey is going to set me up with what stocks to look at. Before he does that, I've got some stocks that I want to already put in before Joey gets into it.
Get that DraftKings?
Yep. RTX, NOC, XROF, CTRM, FLGT, DKNG. All right, go, Joey.
Cost.
COST. NOG. LODE. All right, a Comstock. Okay. LGT. I don't track LGT.
Block.
BLOK. Builder. That's a good one. SINO.
What was the other thing?
FN is FanDuel, but I don't know what the ticker symbol. You want me to look at it? Okay. DH, another builder. POTX. I hate you. All right. Those are the stocks that I got today. I will say, Joey's going to put a link if we missed any of your stocks, which I know we did. If we missed any of your stocks, by all means, utilize the link to get free stock analysis from VectorVest. All right, do that. All right, let's go take a look at these stocks. I'm going to blow through them. ASX, you'll always notice that I look at a 3-month graph. Why? Because what happens every 3 months on the stock? Earnings. I always want earnings pictures shown in my graph because earnings is the engine that drives the stock's price higher. So I've got a 20-day exponential moving average. I've got support resistance. I've got volume. I've got earnings per share and earnings growth. So I'm going to give you a good, solid, longer-term view on the stock. ASX, below that level of support, former support, and the 20-day exponential moving average. Earnings looks good, earnings growth looks good, but the stock's price is not rising right now. The stock went from a buy to a hold as well. Good opportunity for you to might want to take that off the table. RTX, above the 20-day exponential moving average. Look at where it's stopping, right at that level of resistance of 75.07. I need to see the stock break above that or even higher than the high before I decide to pull the trigger on it. If I own it, how about using that 20-day exponential moving average as a way to get out of it? Today's wick was right close to it. Earnings is falling. Be careful with that. If earnings is the engine that drives the stock's price higher, falling earnings are not good for a stock. Let's go to the next stock, NOC. In a channel. It's moving sideways pretty much, sideways to slightly down over the last 3 months. Very erratic in this channel. This is probably a good trading stock bouncing off support or retracing from resistance. Earnings is higher than it was 3 months ago, but falling. Earnings growth is higher than it was 3 months ago and starting to stair-step effect, but the stock's price is just not moving up right now. XROF.
RT to the chart to show.
I can do that, but I can look at it on the graph and do the same thing. If I'm looking at a stock's price falling like that, RT is doing the same thing. So to keep these pretty much going, I'm going to look at, from a technical standpoint, what's going on, but then I can also look on the side. Our indicators, a lot of the stocks that are falling down, relative value, relative safety, relative timing, are below the value of 1. XROF is a great potential due to what it does. But it is a more risky play. The fundamentals are not behind it. People are buying it because of the technology behind it. I will be transparent. I own the XROF. I do own this stock. And I got halted again today. And Susan, is that her name? I think it's Sue, asked the IRROC, which is the IIRC, which is the Canadian version of the SEC, to stop it. I think she needs to put out a stronger response to what happened with MRNA research, and I think they're going to put that together. I think MRNA research needs to be beat. That's my opinion. That's all I got to say about it. If I'm looking at the stock right now, I would definitely rate for a couple of things. For the stock to break above that level of resistance of 395 and go above this level of the 20-day exponential moving average. I'm looking for the both of those things if you're not in it right now. Me, I'm in it. I held through all of that. That was good yesterday, and it halted. I like the technology, thus the reason I'm in it. That's the reason I'm in it. All right, CTRM, I like this stock as well. This stock is doing everything it needs to do. I don't own this stock. All right, I did a story on this stock on YouTube, 10,000 views. 10,000 views on that if you haven't seen it yet. I like Castor Maritime. It's doing the right things to grow the business. I've got a solid level of support sitting at 76 cents. Right now it's at 78. If you're in it and it does fall below that, I'd think about getting out of it and wait for a better buying opportunity. But look at where it stopped. There's my line in the sand when I did the story, sitting at 76 cents. It's still above it. Earnings growth rate is not there, but the earnings per share is there. All right, the company's doing a lot of good things. They bought back a lot of their shares to raise capital. I have got 12 ships. I saw a story. I need to do a follow-up on there where with another maritime company, they got another boat. All right, so I need to do a follow-up on CTRM. Flugent, below the 20-day exponential moving average. That's a good sign to not be in it right now. Volume is pretty steady. Earnings per share is falling. All right, remember, earnings is the engine that drives the stock's price higher, but they are growing their earnings at a good clip. So their earnings is at 52% a year. Earnings per share is at $5.42, but watch it, it's starting to fall. Price is starting to fall. The stock just became a sell recommendation. Be careful if you own the stock. All right, be careful if you own the stock. Let's go to the next one, DraftKings. Slowly but surely moving up, a little bit more volatility in the stock. Big 2 days down, right at that 20-day exponential moving average. Earnings per share is falling. Earnings growth hasn't changed. It's pretty much moving sideways. Not only is the stock's price falling down, it's doing so on above average volume. So not only is it going down, but a lot of people are selling it. Be careful if you own it. That is that level of the 20-day exponential moving average. You might want to think about getting out of it if it falls below. All right, and then it's got a level of support sitting at 56.42 if you want to give it to that level, a little bit more room. Next stock, Costco looks bad. Woo-wee. Exactly. Good googly muggly. Wow. That is below. It fell below support of 360.59. It's below the 20-day, moving up on above average volume. Earnings growth rate looks good. Earnings per share looks good. I like the stock from that perspective. Not the right time to be in it. All right, not the right time to be in it. Glenn, since we won't see you tomorrow in the Jockey Club, have a great day on Saturday. Many happy returns. Thank you, Mark. I appreciate it. CTR video was good. Brought to us by sponsor Cafe Bustelo. No. I'm telling you, we need to reach out to Cafe Bustelo. I need to get some cheddar from them. All right. Gas. What did I just talk about? Oil. Petroleum U.S. exploration rising. Watch the earnings growth rate, which is sitting at a negative percentage. That makes sense because this industry got smoked like a pound of bacon. But earnings per share falling off, still positive. Just be careful with that. It is trading above the 20-day exponential moving average. I do have a level of support sitting at $9.96 and above the 20-day. I'd like to see, if I'm not in the stock, I think the industry is about to explode and go up. I would think about getting in higher than the high. Next one. Oh, I did a story on this one as well. These are all of my notes that I did on the story. What did I say? 3 and 8. How could I have found the super aggressive entry? Here's my line in the sand. My line in the sand is sitting at $3.01. It has a level of support right now at 428. Still above the 20-day, but pulling back. I've got a more solid line to give you out of that stock at about $3 if you don't want to give it that much more room. Earnings per share is about the same as it was 3 months ago, as well as the earnings growth rate. The stock's price is falling. Load Comstock. Was this the company? I don't remember what the story was on this. Do you remember what the story was on this? Well, this wasn't the one that was... Was this the one that was doing the mining of the lithium? Torchlight is going to Meta something or other. This might, it is. This is the gold silver mine. Yeah, they're going to be trying to work with spent lithium. That's what this is. And that's why I like this. It's a gold silver. They pivoted. They weren't making a lot of money in the gold silver space. They were pivoting, and I think that that whole lithium space, I did a story on it. Check it out on YouTube. All right, next one, Block. Love this for tracking the cryptocurrencies. Now, you see the pullback? I want to show you something in regards to cryptocurrencies. There's a lot of influencers on cryptocurrency, right? There's a lot of big companies getting involved with cryptocurrency. I'm going to tell you that the pullbacks that we've seen in the past years or so are not going to be nearly as bad as they were back here. All right? There's too much big money in it right now, and I got a solid level of support sitting at 48.42. Now, everybody's like, well, should I hold on to it? Well, 1, 2, 3 points where it stopped at that 48.42. If Block breaks below it, crypto could be in for a little bit of a downside move down to about 36, 34 by way of this ETF. But it's moving a tad bit sideways, a down day today, but never pierced that level of 48.42. That's going to be your line in the sand. All right, that's going to be your line in the sand. Next one, Builders. Builders are on fire, but this ETF, right? Nope, this is more than an ETF. This is, it's not an ETF. No, and it doesn't look like it's an ETF. Notice I had a level of resistance sitting at 42.69. As it went up, it served as a level of support. Look at today's activity. Not only did it break below that level of support, but it also broke through the 20-day exponential moving average. Both things happened today. Be careful with that if you still own it. Think about taking half off the table, if not all of it.
Builders first.
Yeah,
Fortune.
it is a fortune fire. All right. Because the earnings per share looks good, the earnings growth looks good, relative value is above 1, relative safety is above 1. Fundamentally, this stock is sound. But notice that when it does fall, it does find a level of support. I would wait if you're not in it. Wait to see if it can find another level of support and buy once it breaks above the 20-day exponential moving average. CNO, Transportation Services, earnings falling over the last 3 months. Earnings growth rate falling over the last 3 months. Stocks price falling. Broke through a level of support of 635. It's coming up to another level of support at 455. It is definitely below the 20-day. I would wait on this one as well. All right, next one. DHI, another in that builder's frame. Look at that nice level of support sitting at 74.09, trading at 74.36, currently below the 20-day. Let's see if this level holds, because if it does not, I got another level of support sitting at about 68.97. Always remember that at some point, you've got to make a decision on when enough is enough when it comes down to getting out of a stock. All right? And I like to sell the covered call on block, Paul. Absolutely. If volatility is picking up in the market, you're going to get a nice premium. PotX, marijuana stock, below the 20-day. I think a lot of people expected the marijuana legislation to go through by now when the president was elected. I think that everybody thought it was going to be one of the top priorities. Doesn't seem to be that way. So marijuana stocks was like, yay, let's go. And then they're like, oh. So when you're happy, hooray, or sad, oh, or excited, wow, or glad, hey, how many of you remember where that came from? All right, type it in the room. How many of you remember where that song came from? All right, just type in the room. I'm curious to know. I know I'm a little old. I want to see how many of you can remember where that song came from. Let's go to the next stock. I think it's the last stock, and it is. Tonex Pharmaceutical, I did a story on it as well. What I like about Tonex Pharmaceutical is that they're going after fibromyalgia. Man, I don't own the stock. I just put that out there. I don't own the stock. But it's coming up to another level of support just below it at 101. So be careful with that. Nope, it wasn't Mr. Rogers. Nope, it wasn't. You're smoking too much if you thought it was Biden's highest priority. I thought it was part of his higher priorities. I thought that was my opinion, Doug. That's what I thought. Nobody knows where that song came from. Really? Wow. All right. I guess I'm going to put it out there. Glenn, we were born in the same month, in the same year, and I don't remember that song. I think you need to sing it. Nope. That was from Schoolhouse Rock. What was that song? Let interjections start your sentence right. Interjections, hallelujah. You don't remember that? It was from Schoolhouse Rock, Interjections, not Sesame Street, Interjections. All right. So what am I at? 313. I'm not at 330. I'm not at 330. All right. So I'm not going to look at any other stocks today. I sorry, but go to the link that Joey put in the room. And it wasn't Junction Mark. That's a different song. Joey's going to put a link back in the room again for a free stock analysis report. You can get any stock you want analyzed in the software that we track. All right. Man, that was a good session. We kept a lot of people. How many likes did we get, Joey?
6.
We did get over 200. Absolutely. All right. So I'm glad that you guys liked what you saw today. Love the comments. And I like the interaction. Decriminalization, not legalization. I got you, Ninja. That's probably the better way to say it. Decriminalization instead of legalization. I got you. All right. How does that differ from subscription? So somebody's talking to somebody else in the room, and that's cool. I like that my VV Nation people talk to the people who are not subscribers. I'd rather you talk to them than to ask me questions about the software because I'm going to be very biased because I work here. But VV Nation, they pay. This is their money that they use to pay for the software. All right. Remember I told you that you can get the software for free? I'm going to give you an opportunity to do that. We've got a contest going on right now called the 28-Day Portfolio Challenge, where we're going to teach you how to look at the stocks that you own. We're going to show you how to clean up your portfolio. It is free to enroll. Go to, Joey's going to put a link in there. I think it's www.vectorvest.com/28. All right, but Joey's going to put the link in there. During this challenge, you get free access to the software. You free access, and we teach you how to do those things, how to clean up your portfolio, and how to make it right for you. All right, it's free. All right, join the 30-day challenge right there. It's free. It's normally a $475 value. It just started this week on Monday. That's all right. You can still get into it and still catch up and rock and roll. It is free during this contest, or this challenge. And the next thing I want to talk about is the stock madness, sort of like the March Madness, but it's the stock madness where we match up stocks into brackets. You pick what stock you think is going to outperform the other stock for the week, and you keep it going through just like you would pick Duke to win it all. All right, big game this a big game this Saturday between Duke and Carolina. We're gonna have to spank you. We're gonna have to spank you. All right, so big game coming up. I think that if we lose that game, Duke is not in the tournament. I think that's safe to say. You would say so?
Yeah, I'll go the first time.
Why are you talking about what happened the first time? Anyway, you got 3 days. Stop talking to me right now. I'm talking to VV Nation. All right? I'm talking to VV Nation, so this is for you. Knock you out. All right. So it's free. If you get a perfect bracket all the way through, you guys can win $250,000, $250,000 in cold hard cash. $250,000 in cold hard cash. All right. So, okay. So there we go. All right. Now with that, I'm done. If you're just getting in, they record the sessions that are very good. Thank you very much for that, Ron. All right, so fun to fill out brackets, always, JG. And even if you fill this out, share that link for the Stock Madness with people on your social circle. We're trying to get a lot of people in there. All right. Oh, I'm done. And I still got a video to do, don't I?
Coffee.
I need some coffee. Thank you guys for being here. VV Nation, you guys rock. I appreciate it. I think we did good as far as the many people we had. How many likes did we get?
19.
219. There you go. I got over the 200 that I was looking for. And so thank you for that. Subscribe to the channel if you're not a subscriber, folks. If you like what you saw here, subscribe, hit the bell icon so you can get alerted when new content comes out. With that, folks, adios, arrivederci, ciao, au revoir, sayonara, aloha, salam, shalom, namaste. We're out of here.